And gentlemen, welcoming you all after the lunch session and the first session which is going to proceed post the lunch on another exciting topic and subject line, optimizing credit risk analysis with the power of AI and machine learning. Now, before I call on the esteemed panel and I ask you to invite them with the biggest round of applause, few pointers of discussion. This panel is going to highlight and talk how technology is changing credit risk management, AI and ML models for credit risk and how they help in boosting approval rates, how to minimize credit risk using AI-driven automation, and many more. So now, without further taking any time of yours, I would like to start the panel session by inviting the honorable panel members in the order of the sequence, and please help me welcome with the biggest round of applause. Joining us first, Mr. Laxmikant Agarwal, Head Credit, CSB Bank. Can we have a big round of applause to Mr. Laxmikant? Laxmikant ji, welcome to the panel. Kindly take your seat. Joining next is Mr. Pavneesh Singh, SVP and Head Risk, Credit, Saison, India. A big round of applause for Pavneesh. Pavneesh ji, welcome to the panel. Please have your seat. Joining next, we have Irem Sayeed, Chief Credit Officer, Ugrow Capital. A big round of applause to Irem. Irem, welcome to the panel. Please take your seat. Joining next, ladies and gentlemen, we have Mr. Rajat Jain, VP Data Products from FinBox. A big round of applause to Rajat. Rajat, welcome to the panel. Please take your seat. Joining next, ladies and gentlemen, we have Mr. Praful Rajpopat, Chief Credit Officer, Capital India Home Loans. A big round of applause to Praful. Praful, welcome to the panel. Please take your seat. Joining next, ladies and gentlemen, we have Mr. Rajeev Das, CRO and Head of Collections, LoanTap Financial Technologies. A big round of applause to Rajeev. Rajeev, welcome to the panel. Please take your seat. And now, ladies and gentlemen, we would like to call on the honorable moderator of the panel session, Mr. Anant Deshpande, co-founder from FinBox. Anant, welcome to the panel session. So all over to you, Anant, and it's a fantastic panel here. Anant is the captain of the ship and looking to a great session.
Hello. All right then. Welcome back after the lunch break. I'm sure all of us are in super high energy levels, and we'll make this panel very, very conversational. I think that's what we've agreed to before we came here. What we'll do is we'll make, we'll keep this panel open in the sense that we can go as technical as possible. The topic is a very interesting one. Optimizing credit risk analysis using AI and ML. So any specific numbers that you, panel members would want to throw, I think it'll be great for us to hear, and we look forward to a very interesting one. I think all of the panel members are, they come with great expertise in varied credit products and in, of course, different organizations. I think we could start with the first, maybe an introduction. Feel free to take a minute or so to introduce yourselves. Give us your background, give us a sense of what your areas of expertise and interest is. And, we'll tie it down to, AI and ML use cases that you've witnessed today and that you intend to see in the future as well. The audience, I would urge you to have, questions, whatever come to your mind, keep them to yourselves. Towards the end of the panel, in the last 5 minutes or so, we'll have a question-answer round. So let's get to it. Laxmikant first.
Hi, everybody. Good afternoon. I am Laxmikant Agarwal. I am a CA. I have almost 12 years experience. So I have done wholesale banking, SME, and corporate credit. And presently, I'm working in CSB Bank. So I have done in my career entire from PSU Bank, private bank, NBFC, and again to private bank. So I've seen the way things are moving in banking industry, the use of technology to improve the credit assessment part. I will touch the SME part and we'll discuss the SME portfolio. Thanks.
Pavneesh?
Yeah, hi, I'm Pavneesh. After I did my MBA in CFA, then I started working with SBI Life Insurance to begin with, and worked with Kotak, Indifi, if you all know, Incred, and then this is Credit Saison India. To just give you a background, Credit Saison is a Japanese company. We are a fully, we are a fully owned subsidiary of Credit Saison Japan. We are listed in Tokyo Stock Exchange, and we are, one of the first three, top three, credit card issuers in Japan. In India, we started in 2018, but we got our RBI license in September 19, where we thought of active lending in the country, and we spent a lot of time while we started with. We have few verticals where we started with wholesale financing to the NBFCs, then co-lending, with a lot of known brands in consumer as well as SME. And, a year back, we started our direct lending directly to the customers, where we went to the different geographies of the country, and we have plans to go furthermore. This is how, the journey in Credit Saison India has been. And I think I'm very much, interested in the topic today, which is AI, ML in underwriting, because all of us come from a background where traditionally we started looking at the financials. Then we evolved into an era where we were very happy with GST coming in, and we were really excited to document GST 3B returns and say, okay, now we know how much is the sales. We are not taking on the letterhead of the CA. And now is the time when we can go deep into with just one consent of the customer. We can go and read all transactions. When I say access to GST, it means your sales, purchases, you go HSN code-wise, you go location-wise, you go deep into it. You understand the customer, and you can draw the entire transaction that the customer is doing. That coupled with the progress on the banking side, of course. Again, we used to collect bank statements earlier. Then, Perfios and other players came into bank statement analyzer. Then we were happy, like, we can get a customer, submit a PDF, and we can see in Excel, because the credit managers are comfortable looking at Excel, playing around the filters, right? And now we are talking about account aggregator, where with one consent, everything gets together, coupled, and gives a output where the credit manager can quickly take decision. So I think exciting times, and just as before we proceed, very excited to see how we are kind of expanding the digital footprints, and kind of optimizing more and more of financial inclusion. So those segments that we were never have thought that we can do credit on, everybody would say I would do 700 plus, I would do this segment, I would need financials. Now people are talking about, okay, what about this segment? So even in Credit Saison India, we're also focusing more on going deep into segments. And I throughout maybe once we kind of go ahead with this discussion, there would be a lot of insights coming. Thank you so much.
Great. Irem?
Yeah. Hi, I'm Irem. Been in the finance industry for almost 20 years now. I've worked with organizations like GE Money, Kotak Mahindra Bank, Relicare, Magma FinCorp. Now with Ugrow Capital, I'm one of the founding members. Been with Ugrow for 5 years. We are a SME-focused company. We are giving unsecured and secured loans. Currently, I'm looking after the credit vertical there. I have a team of underwriters. We do secured, unsecured loans, machinery finance, supply chain finance, various products. And at the core of all of this, at the core of our underwriting is our scorecard. So when we discuss things on the panel, that is where my focus would be on AI/ML-based underwriting and a scorecard-based underwriting.
Great. Rajat?
Hey everyone, so this is Rajat, and I'm a data analyst, or data scientist at heart, and 12 years of experience in data analyst and data science, and worked with Home Credit, previously, and was heading the underwriting practice for the consumer durable, where the ticket sizes were 20K, and the online cash loans, which were again around 75K ticket size. So that's the experience that I have when it comes to unsecured lending. And we'll be happy to talk about the, how we adopted ML and how we reduce the processing time, to 15 seconds when it comes to, taking decisions. And of course, dispersals, making sure that the customers were dispersed as early as possible. So these were the main things. And currently, I'm working with FinBox, creating different ML scores using different alternate data products and making sure that we drive that dream of financial inclusion where all the segments actually come together and they are included in the credit landscape. And of course, we are closer. We are financing, almost 1,500 crores per month, like helping dispersal of 1,500 crores per month. So, and want to take this further. So, happy to hear everybody here.
Cool. Praful.
Good afternoon, everyone. I'm Praful from Capital India Home Loans. I have close to 17 years of work experience post-qualification. I have done chartered accountancy and MBA. So most of my journey, professional journey, is into housing finance, that too in affordable housing finance. My previous two companies were startup companies in affordable housing finance. So in startup, I had to work right from the scratch, designing policies, processes, products, opening branches, going into the field, and right from scratch, I had to do everything. When it comes to digitalization and use of AI, ML, which is my, again, area of interest, and I'm working very hard in this area. Because the journey of customer, right from onboarding and till disbursement and post-disbursement, and when it comes to risk management, AI, ML plays a very important role. So that's where we are working right now. Thank you.
Cool. Rajeev.
Hey, hi, this is Rajeev Das. I have been in the industry as a banker for the last 18 years. And I've not been into much of the other banks. I've started my career and with Standard Chartered and been with them for a very long time. Before being with my friends, we went into LoanTap. LoanTap journey started with an aim, okay, that how can we speed up the process, okay. So at a time where in today's industry where people require faster burgers, pizzas, they want at a faster time. So all my friends over here are in the competition, including me, to give that faster service and delivery, okay. So in our life, everything starts with the case that the other bank is doing at 2 hours. Why can't we do at 1 hour? Then it comes to 15 seconds, 20 seconds. So it's right now a race for all the credit people down there. And the only thing which I feel is that if we have the correct data and algorithms in place, the people and the people who are reporting to all of us can take an informed decision. See, the problem is not the time, okay? So the problem is the world is moving faster, and it's always said, there's a joke in AI which says, the people, the human beings always think that they know better than the machines, okay? It's partially true, but of course AI is there. AI and ML will be there in this world, and it will probably drive us, all of us, a little bit more, okay? At the same time, just to balance it out, everybody has a portfolio risk to handle, okay? So the portfolio risk is also one of the factors which we should look into while fastening of the loans. Okay, so it's not only the data, it's also the risk involved in the particular segment. Probably the data will speak for itself. I think so.
Great. I think this panel, therefore, it's sufficiently clear that the panel members are from very diverse backgrounds, including secured lending to businesses, secured lending via mortgages, unsecured personal loans, consumer loans, and I think very large ticket size secured loans, as Laxmikant mentioned. And I'm sure, Irem, you mentioned that, at the core of, your risk management or underwriting are your scorecards. And it mustn't have been an easy journey. We started from being very, very manual, and now you're here where scorecards have become important. That would have been a journey. Can you talk a bit about, this journey, the hardships, what actually, how actually you went from like a manual underwriting to more automated now, and maybe, feel free to talk about how automated is the underwriting on your side today.
Okay. So again, when I started my career in this industry in 2003, 2004, and started with STPL at that, and then slowly to SME funding, the data entry work used to have an entire setup. I think everybody here would remember we used to have these CPA, workshops, which were like sweatshops, where very low-paid executives used to sit and they used to all-day punch banking. That was the one document which used to require hours, if not days, of punching. We used to get, if it's an SME file, and I'm talking about unsecured loan, where the customer has a current account, then it's easier. If it has an OTCC account, then there would be box files of papers which would be punched into Excels to do some sort of data analysis. And we were all dependent on how tired or not tired that executive is, how genuinely he's punching that banking into the system. So those were the days when we started off, and that continued, I think, till 2013, 14, when suddenly these companies started coming up which were doing banking analysis, which were consuming banking through PDF formats or through scanned documents, who were doing this back-end, data punching of these. So not only the data punching of it, but also making some sense of this data. Now we have reached a stage where this is just one part of what we do in a scorecard. So this part of consuming the banking is now a matter of minutes. So we say that we give a pre-approved in principle approval within an hour is an upper limit, because no matter how bulky the banking is, it is consumed within minutes. Post that also, there is a lot of intelligence which is applied on this banking. All my policies, all the analysis that I am required to do, all of it is done through the machine learning model. So the scorecard for me gives me not only a quick crunching of the data, but also an analysis which is required for credit underwriting. As an organization, we focus on PD rather than ED. So probability of default is something that we are trying to control. So this scorecard that we are using gives me a probability of default of a customer, and basis on that probability of default, my credit team is now equipped with certain other policies and parameters that they can take an informed decision. Now, when we started the scorecard, it was basis only the bureau. So we started with the past repayment behavior of the customer, and we tried to analyze basis that behavior going forward also, whether the customer will be a good customer or not, in terms of will he default or not. Then we realized that only past bureau behavior is not sufficient, and we need to add something more, so we added banking in that. And now currently we are in the process of adding our GST data also into this scorecard to make it more robust. So it'll have the revenue stream, it'll have the cash flows, it'll have the past repayment behavior to give me, or to judge a customer within an hour whether we should fund him or not. It's an outright reject or not. Now the other aspect of implementing or using a scorecard was the human factor. So you still have these credit managers on the ground, which are very key to my underwriting, because at YouGrow we call ourselves a FinTouch company, where part of our underwriting is fintech, part is still touch-based, where we'd like to connect with our customer. So now to get to agree and to get to make these credit managers understand that you are not required to question the scorecard. It is not biased, it is very objective, it is not subjective at all, was another task. Because they have their own preconceived notions, they all have they're coming from certain organizations and they have their own experience. So when they look at the scorecard also, they would want to apply their analysis or apply their judgment on it. So that was another task that we had to deal with, to tell them that you need to trust the scorecard. Over and above the scorecard, there are other underwriting parameters that you are responsible for. You need to do that. But I think over our journey, because we've had this scorecard since the inception and now almost 5 years, we've come to a point where the organization, all the employees, all the people who are using it have that confidence that if a scorecard is rejecting, even my business team is not arguing and saying that, you need to do this case or there are certain other mitigants. They understand that if a scorecard is rejecting, then it has done it objectively, it has analyzed whatever could be, and we need to focus on other areas or other cases which are better in score. So we've given a target to our team to have approval ratio in top segments or top scores and to avoid certain scores. And that has really worked for us in terms of not only providing a better turnaround time to our partners and to our customers, but also in building a very, very clean portfolio. But this is just a beginning. We are just at a stage where we are using, and we were discussing this informally earlier, that we are just using the ML part of what we want to do. AI is still something that we are exploring. We would also like to use probably, psychometric tests. We would also like to use what Rajeev was earlier discussing, the social media analysis, the other information about the applicant that is available around on various platforms. So for us, it's the beginning of the journey, and we see that it's a long, long way to go.
So just before I let you go, how much would you say, if you wanted to quantify, what percentage of your decisioning today happens via a scorecard?
Everything. So all my onboarding is through a digital app, and everything which is uploaded into that app goes through my scorecard. So every customer that comes into or come to us, whether approved, rejected, or disbursed, goes through a scorecard. So 100% underwriting is scorecard-based in my almost 6,000 crore of AUM now.
Got it. Yeah. Great, great. I believe in this hall, many would really relate to, Irem's experience of, starting with fully manual kind of processing and underwriting. Some of us would have dealt with this manual human-machine conflict as well, the outcomes that machines give versus what humans feel that, the outcome should be. So, I think that's very relatable. Rajat, maybe I can come to you. You've looked at a lot of consumer side of lending with, high frequency lending. Can you talk about, what percentage of, these loans were automatic? And let's say, in general, what do you see as the gaps in further leveraging AI and ML? Feel free to go as technical as you'd like.
Sure. So I think I'll just state this, that the organization that I was working with, we were getting 35,000 applications per day. And it was unsecured lending, low ticket sizes. So we had that privilege of playing with averages, like law of averages applied completely to the portfolio. And also gave us room for experimentations. We learned through various experiments, and I think some of those learnings actually came in very handy. We have a scorecard, for sure. We had a scorecard for underwriting. And if we were rejecting 100 customers, 70 of them were getting rejected on the scorecard. 30 of them were still getting rejected on certain hard rules or hard checks, as we call them. But that was, again, more from a compliance legal perspective rather than the underwriting checks that we had to put. Like fraud checks, maybe, legal compliance checks, maybe. But for underwriting, if you have to put hard checks, and those hard checks are not captured in the ML model, maybe the ML model could be retrained to make it better so that we incorporate those within the ML model. So I think one of the major things that Irem mentioned was that we started with bureau, then we did banking, and now we are exploring more data like GST, right, which works for SMEs. Yeah. But for consumers, we have a lot of data sources. We have like there's so many, now it's a problem of plenty. Like I have 10 different alternate data sources to profile a customer. Bureau banking is not enough. We need behavioral data. We need how he is performing recently for me to tell whether he will default on a loan or not to a probability average. So the main thing that I see is that the different organizations who are dealing with unsecured lending, maybe they need to adopt a very robust alternate data strategy. That is that they should actually analyze each and every alternate data source that is available. Maybe use it as a pillar. So ML scoring, has different technicalities to it. And one of the key things that, have come in my knowledge is designing ML models based on the data sources and the pillars of the data sources. So if we have bureau as one pillar, and then we have banking as one pillar, maybe device as the third, and so on and so forth, we can evaluate the performance of each of these alternate data sources separately and in conjunction with the other data sources. So if one day device data were to go, if one day banking data were to go, how much impact does it have on my credit default rates is something that, we should be looking at. So I would just say, from that perspective, it's something that we can carry on, make our alternate data strategy robust, make it more mathematical driven rather than intuition driven, because what we had seen is that if you were to reject 2% of your portfolio based on a check, let's say count of bounces in last 90 days, I am going to reject them. You might reject 2% of your population there, but within that 2%, there would still be 1% of the customers who would not default. And if you were to do a multivariate analysis of this variable with others, you will find such segments, which machine learning models do, right? So the thing is, we should keep adding alternate data source because that is what powers ML at the end of the day. Like, you cannot have ML without data. So you need to keep adding data, and while keeping that in mind, we need to also make the cost-benefit analysis of each of these data sources. So that's what I learned, and I think, would like to hear the panelists.
Yeah, just to add, so we were discussing about basically feeding the data. Okay, so the data, so we were discussing. So it is, so it's like the data which you can get it in your Swiggy, Zomato, or certain accounts. Okay. So we can at least analyze it saying that, so this is the kind of order he's doing, this is the kind of restaurants he's searching, this is the kind of amount of food he's ordering. So all these things, small linked things can actually help in the data. And like correctly mentioned, we can design certain loans based on the profile of the client, the way he's handling, because, like, the CPA culture had already vanished today, okay? So I think so the AI and ML has taken a lot of jobs, okay? Because we used to see a lot of people doing the same stuff again and again and again. But I think that human approach still today, I always give an example, I was woken up at 2:30 in the night with a bank fellow calling me and saying, there is a high profile client, I don't want to name him or her, but she has entered the locker room at, because we had lockers at that moment of time, which was 24 hours open, okay? So she came in and she wanted to open the locker. So I said, why you have called me at 2:30? You just open the locker, tell her to open the locker. So he's telling she has forgotten the keys, okay? So I said, what can I do at 2:30 in night? So I just tell them, what is the RM? Does that client have an relationship manager? So the person said yes. I just take me into a call. And the first thing that relationship manager asked the branch manager at night is that, is she drunk? Yes, she said yes. Then said, give the phone to her, okay? And she said, ma'am, the person with the key is just coming. You just go home and we will be there within next 2-3 hours to pick you up. And she was fine and she went away. So, but if you see, that personal touch of human beings is always required. That's why I always say that the way human beings correlate and the people over here, actually only the artificial intelligence and machine learning has helped us to create that data. but you require that one touch of risk. And, what better than all the people over here who take that risk, but they take an informed one, whether we should give or not give. So it's up to us.
Right. So I think one example came to my mind when Rajat was talking. There used to be in one of the lenders' underwriting policies, there used to be this rule: if number of active trade lines is greater than 8, then reject. And we did an experiment to allow borrowers who had trade lines up to 12 or even 15, I guess, and saw that the risk was no different between the two. And when we deep dived, we just found out that, the incoming population who had from 9 to 15 trade lines, were of MSME small merchants who were very well used to taking, loans at a very high frequency. They had very short sales cycles. They were able to, take these loans, repay them quickly as well. So, at the same time, the transactional database model that would use banking or alternative data ranked or scored these kinds of borrowers really in a positive way. So this is just, a small example where, hard checks could go wrong as well, or hard checks could leave value on the table. Nothing is wrong here, basically, but they left value on the table.
Correct. So as we say in credit, there are two kinds of errors. Where one is where you reject a bad customer. The other bigger error is where you end up rejecting a good customer, just because you are analyzing in isolation a parameter. Whereas what Rajat is saying and what you also concurred on, and I also agree in that when you look at a data in isolation, you might not get the correct picture. But if you combine it with other parameters of the same document or of other documents, you get a better picture. Plus, the chances of somebody manipulating and misleading also are lower in that case.
True. When we talked about all of these cores, pillars, and all of these things, these tend to get, if someone had to really implement it, it would become very complex. And to execute on these complex tasks, one has to have very strong technology focus, as well as understanding within the organization, or then partnerships with strong tech partners in general. You can think of FinBox here, but I'm not going to brag. But Pavneesh, I think it's a good segue. If you could talk about usage of tech, and especially high tech, for underwriting and credit risk assessment in general.
Yeah, so I think we've been talking more about ML use cases, because AI, we all feel like it slightly needs to be, it's a slightly far journey. But what I think in underwriting, today is, and what I think about AI and ML, right? The job of AI in credit risk that I think first is, how do you read the structures and patterns of the borrower, right? And ML, I think, is on top of it when it says, within those structures and patterns, let me run some rules and algos to give you an output which the credit manager understands. What we're all talking about is, we cannot, when it comes to intelligence, we cannot replace human intelligence with an artificial intelligence today. Because we feel, and if we would been doing that, and if we are comfortable, all of us would have been funding 50 lakhs to 1 crore through an AI, which we are not doing. Only when we want to experiment, we go very small ticket size, right? And that is where, if you talk about technology, and, when I started, I told like there are a lot of sources that we have access to, and I think India is a golden data lake. And even the regulator is kind of giving us a lot of access, so that you can go access the data and run your models and all, right? I think there are two things in credit. One is, your credit process, and one is your credit decision. So I think Irem and, which all my fellow panel members are talking about is how we are kind of easing out the credit process from the CPA to machine doing that job, right? We were taking 2 hours, we are taking 1 hour. But I think it's not about that. It is not about faster credit, also about sharper credit, where we are also slowly moving these scorecards to being configured like that, right? And when, when it comes to risk management, we are slowly not realizing, but we are moving towards an embedded finance, wherein when we talk about structures and patterns, you need to go deep into the segments. And then it comes two forms of embedded. One is a vertical embedded, one is a horizontal embedded. And when I say vertical, again, it is very, very deep into segments. In my previous organization, we were only doing 6 segments where we were going deep into each segment. When I say travel, then I know like what kind of travel he is, whom, how does he issue a ticket, when does a payment come, what is the working capital. Similarly, hotels and food and so many, you have so many companies which are ready to partner with you to give you access so that you give loan to their merchants. And when it comes to horizontal, that I think is the game changer at least 2 years from now, which is like for all the general businesses, without even going very deep into those segments, how can you read their transactions and their behavior? So sometimes you realize like 20% of a merchant's product is contributing to 80% of his revenue. But if that 80% gets delayed and gets stuck in working capital, the business is gone, right? How do you read that in advance? How do you design your predictive models over that fact, right? Which I think is, we've started going towards that, wherein, the account aggregator, or you hear about a lot of accounting and billing softwares these days, then they are going to these very small MSMEs. Why? Because these MSMEs do not have a CA. They still maintain a physical paper book to maintain that hisab. And when it comes to, preparing your books and providing you accounting software, I'm actually getting access to your data, wherein I'm also plugged to a lender, which now is solving your problem by reading, all your data, how you're booking, which customers are you booking. And now think like this was vertical, right? And when I talk about horizontal in the similar segment and a similar fashion, when I say GST, and now if I access last 24 months GST of a customer, I need not calculate debtor days of that customer. How? Because I can see the billing date of the customer X for my borrower on 1st of April was, the amount was 1 lakh. And against the same invoice, I also triangulate banking along with the GST. And I see that the bank payment is coming from this, which is almost the same amount. And there where I run some logics and I understand, okay, again, your 20% of your customers are paying you in 90 days because I can validate from your invoice to your banking, right? And there I'm solving that problem even horizontally without going very deeper into verticals. So this, I think, is the kind of evolution of technology which is helping us. While it is also, from an organization point of view, you're also gaining a business advantage here by offering customized products because now you understand the business as well. But at the same time, as a credit manager, I am kind of relying on some system intelligence and relaxing my human intelligence and only using it for my judgment, which is kind of made from these data variables. So that, I think, has largely helped almost everybody looking forward.
Yeah, very interesting. I think we've largely had points of views from unsecured side of lending. Moving on to Laxmikant, I think you oversee a huge secured lending portfolio. Could you talk a bit about the state of AI ML usage? And we all understand that unsecured, small ticket size, high frequency loans give a lot more opportunity to experiment and make or leverage AI ML. But what is it that you guys have been doing or using or planning to use? I think we'd love to hear you paint a picture of maybe 5 years hence what should be the state of AI ML in the secured space.
Sure. I'd love to have this kind of analysis in secured lending, but unfortunately we don't have, as on date, so much technology in SME. We still touch and feel factor because SME is a different ballgame. We go meet a customer, see their working factory setup, and this way is a very different from the small ticket size. We typically lend around 1 crore to 20 crores, let's say. So again, we take the help of technology. We do Karza, we do Perfios, we do video PDC, video calls. But at the same time, meeting customer, understanding their business model, their vision, it gives a lot of comfort to us as a credit person. Coming back after 4 years, 5 years, I'll certainly look at, I want to learn from the industry itself. So we have tie-up with CRISIL to learn the industry. Suppose we want to fund QSR 1 crore. So how can we learn from the industry? What are important things to check in QSR to fund that bigger amount, apart from normal GST, Karza, and all this XYZs. Meeting customers always gives a lot of comfort, no doubt in that. But going forward, we also want to learn how to reduce debt, to improve the structure, to improve the cash flow, to monitor the portfolio also. This helps us. Presently, AI, ML in India, what I feel is a small chat box, which many banks use, but it's not a proper AI. As on date, it's a vision we want to do in 5 years, 7 years. But as on date, we have to move step by step. Again, the unsecured, secured SME portfolio, typical kirana shop or typical turnover up to 20 crores or 10 crores, doesn't have so much structure they have. But we certainly look forward for this kind of technology in my system.
Sounds great.
Thanks.
I mean, I think Irem has something to say.
What Laxmikant is saying, partly I agree with that, in the sense that for SME underwriting, especially in secured, you don't have that 100% confidence like you have in unsecured. But in our experience at UGrow, we've seen that so we divide the secured underwriting into two parts. One is financial underwriting and the other is collateral underwriting. So financial underwriting is all digitized and ML based. You don't have to ask for hard documents from the customer. All the documents are available through API. You can just consume them, analyze them. Credit manager doesn't have to waste time in that. For collateral, because the SROs are not equipped and don't have the data, that is why I think Laxmikant is also right in saying that that is the data that you can't get or rely on. So that is where you still do the traditional approach of approaching the customer, doing physical visits, going to the SRO, verifying all these things. But if that data in future is also digitized and the government makes an effort in, ensuring that everything is digitized, all documents are signed digitally, all records are kept digitally, I think it's only a matter of time when we do the legal verification of documents also digitally. To an extent, with the help of various websites who list these properties for sale, not that particular property, but even if that area is listed, it helps us in a kind of desktop valuation. Without going to the premises, you can get an idea, this is where the range of the property valuation will be, and we are using that. So you can at least tell the customer that whatever you are expecting, this is the range within which I can fund the loan. Then, of course, because, again, the areas are not documented and mapped the way we expect them to be, a physical visit and a little bit more TAT is required in deciding a secured case. But as far as financial underwriting is concerned, I think all is digitized, and we've reached there.
Great,
yeah,
great.
I agree with this. So almost financial part, system take cares. But apart from financial, there are a lot of other things, which is a physical aspect and other things, which we still need to develop. Yeah.
Sounds great. I think we'll get another secured lending viewpoint from Praful. But just before that, after Praful is done, I'll kind of ask you a quick rapid fire, and you just have to tell me what's your next, next move on the usage of AI and ML in your respective organizations. And if there is any level of sophistication that you are thinking of adding, please reveal it to us on this August panel. Praful.
Sure. So when it comes to secured lending, and especially when we are dealing with informal segment customers, wherein you will not find income documents like ITR, GSTs, and these documents are not available, wherein underwriting becomes more difficult with the use of scorecards. So therein you will have to go for personal discussion with the customers, assess their cash flows, check their businesses, verifications with their suppliers and customers, and all this stuff will come into picture. So recently my colleague was asking about how we can digitize the entire journey, even in informal segment, from customer onboarding point of view and then underwriting point of view. Yeah, it's a challenge. There is still evolution is going on. So there are video PDs which have been introduced. But then again, there is a challenge of how will you mitigate the risk of the customer has not set up the business only for the purpose of taking the loan. Then now, thanks to UPI, which started from 2016, now UPI-related payments, you can see, especially post-COVID, that UPI has picked up. So you can see many transactions related to UPI. And now AI and ML will come into picture when it comes to personal discussion with the customers. Maybe you can use lat-longs of the customer mobile devices in future to see that whether customer is actually staying in that premises and he is doing business from that premises. When it comes to secured lending and especially affordable housing finance, so there are two parts. One is profile. So profile, we have discussed about the digital journey of customer onboarding and then all other processes like verifications, including bank statement verifications, their income documents, and loan eligibility calculation, and then NDCs and disbursement and post-disbursement compliances. The second very important part is property. So as Lakshmi was saying, in secured lending, we face this kind of issues if you want to digitize the entire journey end-to-end. Because property is very important factor. If something happens to the profile, we will have recourse to the property. Now, as Irem was mentioning about the technical aspects, there is legal aspects. So legal clearance we take from our panel advocate and technical clearance from technical agencies. Here in a vast country like India, each state has different land laws, different requirement when it comes to mortgage. In some states, there is a NOI requirement. Some states have MOE requirement, registered mortgage, and other requirements are there when it comes to mortgaging the property. And when it comes to registration also, as Irem was mentioning, each state has different requirement. And mostly it is physical registration of sell deed. But going forward, when right now also many states have started digitalization and digitization of property papers. In some states they have started even 10, 15 years back, and some states have started now. So going forward, when all the documents are available digitally and all sell deeds and agreement to sell, when registration is happening, then also it starts happening digitally. Then in secured lending, also the entire journey will be digital.
Yeah, definitely. I think digitization in land records, and generally digitization in general is an exciting topic. It's a vast topic in itself. Imagine what, even AA, once it's live and, for everyone, what it will enable. And you could have, banking transaction data flowing for a borrower every day if you need. You can pull up to, even once every day, and you have the ability to pull it for years together. So that's the kind of granular insight that you will get. And so it's not just, underwriting that will be put to use, but various cross-selling, other financial services, management, collections, so on and so forth, so many use cases. But I think we are running out of time. So, in the just 10 seconds per person, what is the next big thing, starting with Rajat?
So I think voice
that you'll be doing, like really.
Yeah.
If we come back to this panel, we'll ask you whether you did it or not.
So voice analytics, video analytics, because that is a use case that comes to my mind after listening to the guys. And also maybe simplifying underwriting strategies, somehow a framework for it. So yeah, that's mainly.
Sure.
So for us, it is, I think Praful was also mentioning this, small customers who don't have any income documents. Right now, the only way to underwrite them is actually going to them and doing some sort of liquid income assessment. We would like to do that through AI rather than going to the customer and depending on the credit manager. That is the next step for us.
Sure. Pavneesh?
Very aspirational, but I would like to, kind of explore this Digi Yatra module, wherein, your face is linked to Aadhaar, Aadhaar is linked to PAN, PAN is linked to GST. So why don't you offer a loan on a video call in about 3 or 4 minutes and forget about CPA, credit manager, and all those things, right? So yeah, really aspirational, but yeah, that's where I think I aspire to look into.
Sure, no. If you don't dream, how would you actually realize it, right?
So my aspiration will be, without meeting the customer, I can lend 20 crores or 15 crores with the help of AI.
Wow, that's nice. It's big. Rajeev.
So Yeah. So we were working on a lot of predictable analysis. Predictable in the sense that whether the customer will default, whether the customer will has a tendency to default. We have succeeded into certain extent. Like I was mentioning, we are around 70-75% correct. But I think so that level has to go up to 90%, so that you get that comfortable analysis from all the credit heads over here and as well as in the industry. So they can rest in peace for some time.
Sure,
so
sure. I hope your team is listening to you, your analysts and all. And
yeah, definitely.
They make it, in production, they do it for you.
Yeah. So definitely, we have worked on it. I think so. Probably in next 1 or year more, I can exactly tell you by 90% efficiency that whether the customer will default or not.
Great.
This will actually help us out.
Great. Praful.
So my aspiration will be to make the entire journey of secured lending digital, right from onboarding till disbursement and post-disbursement also.
Awesome. Yeah, that's nice. So we just have 2 minutes left. Guys, any questions? Please raise your hands. Someone please take a mic. This is Anuj. Anuj Minglani from Credit Saison.
Hi all, I'm here.
Oh, okay.
So my name is Anshul. I head the risk analytics for IndusInd Bank for unsecured portfolio. First of all, thank you FinBox and Cynics for giving me an opportunity to ask a question to the distinguished guests and the panelists. So I'll have a quick one. It's fantastic the way its discussions have been shaping up since morning, that AI is the next big thing in the market and AI is the next thing to go after. But one question for all the head credits. How do you think, or how do we gear up for another catastrophic events if we are just reliant on AI? If you are using AI as a go, no-go category or as a go, no strategy, and eventually the underwriters who are the next generation underwriters will be just given a statement that if this is AI says yes, click on yes. If AI says no, click on no. How do you plan to install that into your whole models? Because these are all reactive models, thinking about past data, thinking about the alternate data. Alternate data itself is a questionable task right now. Tomorrow government says you cannot capture mobile phones, don't capture it. So how do you plan to do that? To gear up for the next catastrophic events using AI.
Okay, so how do you ensure AI based decisions are right? How will you ensure that? Is that how it will be rephrased? Sorry, it was not very clear when we heard it.
The voice was echoing.
So sorry, is this clear enough? Yeah. So my question is, AI will be used for a go, no-go strategy in the future. And underwriters will just be given a statement that if it's AI says yes, you click on yes, AI says no, you click on no. Leaving little for him to think. And even the next generation underwriters might not even be able to read a CIBIL score or might not even be able to see a CIBIL trade line. So in that event, how do you think, considering AI, Irem said 100% of her underwriting is via a scorecard model. So how do you think will the catastrophic events like a COVID or a Goldman Sachs debacle will be managed?
I can just answer it. See, again, as we all mentioned, there will be a human approach, Of course, machines can give you data, it can crunch the data, it can give you algorithms. It will give you actually the entire spreadsheet. But, there is a human touch. That's why I was mentioning. So there is a relationship manager who knows the customer better than you. Like he mentioned, meeting the customer, and you take calls, So Irem will take a call when she feels, I should give to the customer. So not 3 crores, but 2 crores will be fine. So that kind of decisions, I think so, 90, 94%, 95% machine will give it to you. But that 5% is very important as a human being. See, so I always say, so you have to take a risk. Okay, so somebody was telling me why. So I said, when you are in a relationship also you take risk. Okay, so in anything there is a risk involved, and that risk can only be taken by a human being.
Yep. So I think Rajeev, feels that there will be human intervention, so you're safe.
I'll add to that. So I would say if you've been to Dubai recently, the immigration there is extremely quick. They don't check any papers. They just scan your passport and probably read your iris, right? And they go by the data which is stored there in your records. And that's it. And they trust that. And we all know the levels of crime in Dubai anyway.
Yeah.
So that is where underwriting and lending will be one day. Where we would say the scorecard, the AI, the psychometry models, all of them will tell you the customer has to be funded or not. If you deviate from there, you'll pay the price. If you agree, go by that only, then your portfolio will be what you want it to be.
Yep.
So I feel that we will reach a place where we will not meet the customer at all. We will be able to generate very consumer-centric, very customized products, and we will completely rely on ML and AI.
Yeah, sounds great.
I think
last question.
We can take one quick question.
Yes.
Yeah, please.
Yeah, thanks. Thanks for all your views on how AI and ML has been used all this while. And we've heard you guys talk about how AI ML is being used at the acquisition stage. But I would love to know your thoughts how AI ML has been used post-acquisition, because it's half job done when you acquire a customer. It's post-acquisition and collection where AI ML plays a real role. So would love to see how you guys have been implementing it at your respective organizations.
Could you please introduce yourself and the organization?
Yeah, I'm Anas Minglani. I take care of the VP. I'm VP of SME Risk at Credit Saison.
So we are doing it at Ugro as we speak also. The source from which we take the data for underwriting, that source can continuously be used for your early warning system. I'll take the simplest example of Bureau, where we have Bureau is integrated into our score. And also we use Bureau for monthly scrubs, quarterly scrubs, to see how the customer is performing on books and off books. So this is just one way of doing it. Similarly, with the help of account aggregators, with bank aggregators, you can get an access to the banking. You also have the access to certain part of GST data. Also the financials are available. So once you have the access of this and you can pull it on a regular basis, you can use it to generate a very, very robust EWS system. We are already doing it. So yes, it is there.
Account aggregators have a very low penetration right now, but AIML has been used in the past as well. Bureau does a great job on the intent side of things, which you can do recurringly. But ability is always a gray area because you do not know how the cash flow has changed for term loans and how do you account for leverage or over leverage. Bureau tells you, okay, this guy got another loan, but probably his income increased as, Anant was mentioning 12 loans, 15 loans, that segment's still out there live and working well.
So just going by the patterns, so for example, again taking the example of Bureau, just going by the borrowing patterns or the repayment patterns or the query patterns, you know whether the customer's business is growing or degrowing and do we need to do something about it. Without customer even showing a little bit of stress on our portfolio, can we reach out to him right now, maybe for more funding or maybe for doing some sort of structuring so that his loan is not stressed. So both can be used.
Thank you so much, and I'm sure the panel members are available post the session for any more questions. I'm sure it's a fantastic panel. That's why we had so many questions. So can we have a big round of applause for this wonderful panel here, and great job done by Anant in moderating this panel. Now, ladies and gentlemen, would like to call on stage Mr. Anmol Sontake, Senior Vice President from Ebix Cash, to kindly do the honors of felicitating this wonderful panel here. Thank you, Anmol, for doing the honors. We'll start with Mr. Laxmikant Agarwal. Mr. Laxmikant Agarwal, ladies and gentlemen, Head Credit, CSB Bank. A big round of applause to Mr. Laxmikant Agarwal for his wonderful contribution in the panel session. Mr. Pavneesh Singh, AVP, SVP and Risk Head from Credit Saison, India. A big round of applause, ladies and gentlemen, for Mr. Singh for his wonderful contribution in the panel session. Ms. Irem Sayeed, Chief Credit Officer from Ugro Capital. A big round of applause to Irem for her wonderful contribution in the panel session. Mr. Rajat Jain, ladies and gentlemen, Vice President Data Products from FinBox. A big round of applause to Rajat for his wonderful contribution in the panel session. Mr. Praful Rajpopat, Chief Credit Officer from Capital India Home Loans. A big round of applause to Praful for his wonderful contribution to the panel session. Mr. Rajeev Das, CRO and Head of Collections, LoanTap Financial Technologies. A big round of applause to Rajeev for his wonderful contribution in the panel session. And our honorable moderator, Mr. Anant Deshpande, co-founder of FinBox. A big round of applause to Anant for wonderfully moderating this panel session. Would request all the panel members to kindly step forward. And Anmol, if you could also join them for a group photograph. So ladies and gentlemen, that was a fantastic panel we just had for 50 minutes, optimizing credit risk analysis with the power of AI and machine learning, and a wonderful panel of experts, Mr. Laxmikant Agarwal, Ms.